All right, Red Dog, Scott Redler from T3 Trading. Scott, how you doing this morning?
I'm doing great. How you guys doing?
Good. It's good to bring you back on. You've got the eerie background. Is that because we have some eerie markets today?
Something like that. I like to play a little bit. Lately, a lot of people know me as like the ice barrel trader or the sauna trader. So I figure, rightly so, I might as well be broadcasting from a little Russian or Ukrainian bathhouse in Eastern Europe.
There you go. Well, what have you been watching, Scott? I mean, we've had a lot of really, big headlines, crazy market moves since the last time we've had you on. What's been top of mind for you?
Well, it's a new quarter, right? So when you get a new quarter, you get new relationships, you get new sectors in play. You got to see if existing trends continue. You have to see if new trends start. So whenever I see a chart like this of the SPYs and you see such a long period of an ascending channel like this, everyone always wants it to break or everyone's calling for it to break. But at this point, it's just traveling along it. So I just like to show this for a little perspective on how far we've come. But the trend is your friend. Some people thought it was going to end as soon as we got above 479. Then they thought it would try break here. And then you had another spot here. And here we are. So, I came into this, to this quarter, pretty, with a few longs, a few shorts, not sure, if the AI semiconductor trade was going to change, if any of the, whatever was left of the Magnificent Seven, the Fab Four, or even the Lonely Two, what was going to be able to make higher highs. And after yesterday, it told me I need to reduce a little risk. I have some SPY puts on. I've sold some SPY premium. Usually when we're in a healthy market or I'm a little bit more confident, I have 10 to 12 longs on. Now I have 3 or 4, so I'm pretty flexible. And as of right now, if you look, the SPYs are below this 521. So yesterday I was talking about if 521 breaks, we could at least see 519.49, 518, and ultimately, why not a test of the 516 area, which in perspective seems like a lot right here, or if you're too long right here. But overall, when you look at the weekly chart, S&P was up 10% last quarter. Historically, over time, you see 8-9% a year, let alone 10% in a quarter after a 28% move over the past year or since those October lows.
Got it. I mean, so the average, the S&P goes up about an average of 9% a year. So, and we basically had that in the first quarter. I mean, do you
7
think,
or 8, to be honest, if I'm going to be perfect, which I'm never perfect, but I think over time, the last 100 years, I think the historical average is like 7-8%.
7-8%. Okay, I think I was going off the last 2 decades, which has probably been a little bit better market conditions than the overall historical average.
Sounds
but
right.
do you think there's a chance we just kind of chop around till we end the year around that average, and we've already got the big run up in Q1 and these? I mean, where do you see us going the rest of the year?
Well, for me, I'm a trader, so I go day by day, week by week, quarter by quarter. But also as a chief strategic officer, people like calls. I could see us. If we're up 10, you give back 2 or 3, and I don't think that the high of this quarter is going to be the high of 2024. But we're in a tricky little spot here because most of the street prognosticators thought we'd have 4 or 5 rate cuts, and with inflation being sticky and rates now back at 4.3, less than 4 in the 10-year. It's harder to ignore. So that's why we're going to start seeing a little bit more pressure in the small caps. We've seen some pressure in the bios. And after a 10% move, and oil at 88, it's going to be hard for the Fed to lower rates. So I have a feeling we're going to have to come in a little bit prior to finally them maybe cutting in June. So at this point, I feel like the next 3 months, or at least until earnings season, can be very choppy. I mean, if we come in a little bit, it's probably better than being priced for perfection. And I think rates are starting to matter again. And oil is starting to matter again because it's really shown that, inflation is a little sticky here. So it's hard for the Fed to cut rates. And then the PE still elevated, and you just had a historic high in the S&P. So it makes a recipe for, not being in a rush as a trader with excessive risk.
Got it. And if you guys do want to trade live with Scott all week at his virtual trading floor, as you can see on the banner there, we've got the QR code you can scan as well as the link in the chat. Scott, do you mind telling the audience a little bit more about what they'd get when they joined that room?
Well, as of right now, I've been here since 6:30 in the morning. Traders log in, and by the time the market opens, there's about 400 or 500 traders that usually trade for a living. So that means they're looking for the action, they're looking for news, they're looking for what's in play, and everyone interacts together. I could actually even give you a sneak peek of it here if I put this in here.
Yeah, nice.
These are the guys that are talking. I post about 40 charts up here. Like I just posted TSM, which has been kind of strong, where I give a little bit of an active take. Be long verse here, add through there. So that you have the semis. Then you have while we're here, let's talk NVIDIA. NVIDIA has been my favorite stock to play. 3 years ago, I was the Apple trader. 2 years ago, the Tesla trader. And the last year, it's been NVIDIA, talking about what's important for today. If you're active, 891 today, for me, seems like a key spot. Are we going to hold 891 and go green for cash flow? Or are we going to break 891 and then turn into, more of a bigger channel down to 850 or 861? So, all of this gets posted there all morning after the 6:30 club, and then everyone talks about news and what they're doing. Then they get to see some leftover positions. Like I said to you before, I shorted some premium as a hedge. I'm long some SPY puts as a hedge. And then I still have a little Amazon on, that acted a little better. Google still acted a little bit better. I still have a lot of silver on, silver's working well. So basically, It's everyone hanging out together, talking about stocks, talking about news, and talking about life, having some fun, and trying to make each other money, because 1,000 eyeballs are better than 2 in your basement, or 2 if you happen to be working on a prop desk in Goldman Sachs.
What about a head and shoulders here on NVIDIA? Someone's asking about.
A head and shoulders in the video. We could check that out.
Yeah, it's kind of, a little bit more working on the right shoulder there. I could kind of see the left. I mean, you did have that spike high. Someone asked about that.
I don't see that at all. I see a high here. I see a channel. If you remember NVIDIA, people forget how long NVIDIA was in this channel over here before it broke out, right? This channel was a long channel, in NVIDIA, before it broke out. Remember this move all the way down from here? Well, it went sideways for a long time to absorb the PE, absorb the supply. Here was a breakout failure, breakdown failure. Remember this red dog reversal down here when everyone got bearish? People were talking about that head and shoulders top pattern. Then you had to move too far, too fast. Finally, made a low, a higher low, and then you broke out. So my thought is, as an active trader, is how long is it going to be in here? And I'm not going to have FOMO. I'm going to be taking trades. I'm not going to act like I'm this huge hedge fund portfolio guy with billions of dollars where I'm accumulating a position. I'm not. I'm going to be trading this. And as of now, 891 for today is important. Can you buy it to go green for a trade? Does it break below it, get people short and reclaim it? Or does it break below and hold below and then see 878 and then 861 and then this is the bottom end of the channel? So those are my 3 thoughts as I come in today as an active prop trader who trades for a living with NVIDIA, which has been one of the key stocks to measure sentiment and risk in overall tech.
So, Scott, if the market does, and I mean, I don't want to make too much out of this morning's price action, but if the market does start to, lose some steam, maybe the buy the dip isn't working as well, what are other ways that retail traders can, trade the market and still make money while the market's either going sideways or going down a little bit?
They could try and get short if they're good at it. They could sell calls, or they could sit in some cash, because cash is a position. Every trader has their strengths that they play to. I'm usually like 75% long, 25% short. I'm not the best short. So I'm not always, I don't have FOMO missing a short. But when the market feels like it's coming in and you're starting to break the 820 one day, I'll have less risk on. I'll do less. I'll pick better spots and I'll take trades. When the market's trending, I'll have a lot of risk on. I'll let the market make me money. I'll add through levels when price patterns trigger. But when the market feels like this, it's just as important to sit back, drink some iced coffee and watch things than overtrade and feel like you have to push the envelope. Because, if you push the envelope and you lose 10, 20 grand in a month or more, then you have to make that back before you get paid the month after if the price action is a little bit more conducive to your style. But markets do go up and down, so you have to learn how to short. And, you have to look for some H-sell setups, and you have to maybe, like I said, if people might make money short NVIDIA today, right? NVIDIA right now is at 891. If it gets below and stays below, maybe you could be short, and perhaps it sees a move to the 21 day, which is 878. If it gets below and you're like, oh, it's below 891, I could short it, goes to 889 and then reclaims 891 and then reclaims that battle spot, then all of a sudden you can lose money short, and then all of a sudden tomorrow it's lower. So it's tricky to be short, but there are ways to make money if you have those type of strategies in your tactical tool belt as a prop trader.
Yeah, you got to have more, you got to have some extra tools in that tool belt. Like you said, if you're just doing one thing all the time and it's been working for a while, and then it stops working, you can't expect that. Do you have any other specific names outside of NVIDIA you've been watching for potential trades today?
Yeah, you know what? Google was strong yesterday. Google had a nice candle breakout. Some of in my community have been long it since the gap up post that Apple Gemini news. So Google wound up hitting a high of 155, clean, nice wide range bar. So if the market's not going to fall apart today, this is something that probably could hold the 153-ish area to go green. So I would think maybe Google for cash flow, you could buy it to go red to green. Amazon's been pretty good. It has been great. It's not a barn burner. I did sell a bunch into the strength yesterday above 183. So I'll see if I could add versus spot. But if Amazon breaks the 8-day, chances are, this upper momentum might be kind of lost and it might test a 21-day. So I'll be out of the way. A lot of traders think they could go from long to out and flip short. And then all of a sudden they lose long and then they, press at the bottom and then they get screwed up. Then they lose both long and short. And I don't like to do that. So I'm not going to flip short in Amazon, but I'll see if it continues to pay me to sit and massage my position, or I just have to wait for a better market.
Scott, one characteristic of this market has just been the rotation, right? Especially over the last week or so. If there's, the AI trade or the IWM, we really haven't had a day where they sell everything. And those are the kind of days that you have to really take note. I'm looking
That's
today.
Coming today.
Yeah.
That's coming right now. We've got to sell everything pre-market. I'll tell you that. Only holding up right now is oil. TLT is getting hammered. I want to get Scott's thoughts on the TLT here, because this is a serious move down for the TLT right now. It kind of came out of nowhere. Yesterday we get hammered. Follow through here today, breaching 92 support here. Everybody, including myself, thought, long-term rates are going to start to go down. This is not the case. This is the opposite happening. You're catching a lot of people here, Scott. What are your thoughts on the TLT? You got some technicals for me?
Yeah, you know what? The funny thing is, as you said, is that yesterday, for the first time in a month, I actually did the chart of the TLT, because rates haven't really mattered. The TLT hasn't really mattered for 4 to 6 weeks. And if you focused on there, you missed so much else. And then yesterday, I'm like, you know what? The 10-year is going up above a level. Inflation sticky. This is going to matter. So I actually did the chart of the TLT yesterday. Exactly right here. I drew this yesterday, and this was my language. Felt like the market was getting a kind of comfortable with the 10-year around 4.1. Not sure if it would like it if we work back to 5%. TLT had a gap and go to the downside. 92 area is pretty big. If that doesn't hold, the market might not like it. And that was yesterday. I posted it on my Twitter. I posted it in here. And here's that 92 level. And as you just said, the TLT is gapping below it. And if the TLTs don't go from kind of red to green, and it continues to lower from this level, chances are it's going to matter again, and it'll be something that the traders use, or I use, as a key indicator, to figure out, what kind of risk tolerance we could have. Because markets don't like when new ranges get established, and when new ranges get established, you have to watch the price discovery. So, like you just said, that was very important. This was a key level. It's broken. I guess 89.60 is kind of a level below. But below that, really, there's not a whole lot. It's below all the moving averages now. So, inflation's kind of sticky here, and it's gonna be hard for the Fed to cut rates in June with the S&P 1% off all-time highs. So something's got to shake out.
Yeah,
I agree.
Yeah, and we'll see labor data later this week. So unless you get a big surprise to the downside there, then, I don't know what really why the Fed would have any reason. But all right, Scott, we've been on the line again with Red Dog Scott Redler from T3 Trading. Again, you got that QR code on the screen there if you want to check that out. You can also hit the link in the description to go hang out with Scott all week in his virtual trading floor. He showed us it. That looks exciting. I'm not I might need to come check that out when I get in the office around 6:45, 7 in the morning, so I can get
don't get in the office at
I will if I get all these great trade ideas.
Get on the phone.
There's strength in numbers. We have professionals on from all over the world. These guys aren't in the Alpha team, that you know, a lot of them have been trading for a living for 10, 15, 25 years. Some of them have better actual ideas than I do because I'm focused on a lot of things. So, you know, the more guys that come in who've been trading for a living, the better it is. With strength in numbers, it gives you conviction, and, you know, it points to cool stuff. So you should come on, Aaron. You'd be awesome. Joel, I'd love to have you guys on and interact with my guys too. You know, I come visit you guys, come visit us.
All right, let's do it, Joel. We'll get up extra early one day this week and do that. Scott, thank you again for hopping on. We'll chat soon, okay?
Sounds great. Thanks for having me.